everyone, it's Shaheedah Hill with Maximum One Realty, getting you over the hill to home ownership. Probably the last 3 weeks have been crazy, but this week has been really a lot of things going on at once. And so I want to try to give you just a weekly update and my advice this week as to what you should be doing if you're in the home buying process right now. So the first biggest one that I want to address, because there's a lot of rumors that all down payment assistance has stopped, and that's not the case. So all down payment assistance has not stopped in your state, unless your state is going through a major outbreak and maybe the office has closed. But for the most part, it hasn't stopped. What has happened is, so mortgages are investments that after you close your mortgage, that investors can invest in, and they could buy something called mortgage-backed securities. So they buy mortgage securities. And investors were getting nervous because we have all of these layoffs that have already happened or that will happen based on the coronavirus. So these have become risky investments right now. So what lenders have done, so FHA is a government-backed program, FHA mortgage from the Federal Housing Administration. So it comes from the government. So the government has not changed its lending criteria for FHA. However, you borrow the money through banks or lenders or mortgage brokers, okay? You borrow it through them. So they have tightened up because they want to make sure their investors are only going to invest in things that they know will pay a return, meaning these people will not foreclose in the future due to job layoffs. So where the minimum some lenders would take is a 640, now lenders are saying we're not financing anybody. It varies by lender, but a lot of them are saying 660 is the minimum, 680 is the minimum that they will take. So if they have, for example, in Georgia, our popular program is called Georgia Dream, and the minimum credit score is 640. Now, if you were going through one of the Georgia Dream preferred lenders, and that preferred lender says, look, we're not taking anybody less than a 680 or so, then maybe there's some hold off there. But the individual down payment assistance funds still have money. So they haven't stopped. But what you'll see is some of the lenders that might be working with those down payment assistance programs, they may back up and say, we're not lending to people that meet that criteria. And even if you're not doing down payment assistance, if you are doing an FHA loan right now, then they may, so say you qualified at the very beginning. Remember, all of those qualifications are pre-qualifications. Until you have the money, you've closed, don't have that money. So some of them are adjusting their criteria even after you applied to say now all of you have to have a 680. Now, and this is another caveat right here. What they're doing is not only do you have to have a 680, but the interest rate we quoted you, if you didn't lock your loan yet, the interest rate that we quoted you is not the interest rate. You're going to have to pay a higher interest rate, or you're going to have to pay more fees. So in those cases, I would look into if they're still going to lend to you, then I would look out of getting out of the deal. Talk to your real estate agent, because you don't want to be stuck. I've heard 7%. Somebody said 10%, like ridiculous. We're back in the threes nationwide on average. So 3.5, 3.7, somewhere in the threes, but there's no way you should be paying 7% or higher to close a loan. So I would back up. Even if you have to lose your earnest money, it's probably going to be better for you to lose your earnest money, depending on how much it is, $1,000 or so, than to be stuck in a mortgage of that amount. And maybe you can refinance it later, but right now I wouldn't, because there's going to be closing costs with that refinance. I would kind of wait and hold off and until things kind of level out, or until you can get your credit score back up where it needs to be. So again, where some lenders used to take a 640, now they're making you have a minimum 6 660 or 680 in some cases. So you have to check with your lender. Your lender may be calling you and letting you know that now, our loan terms have changed. This is what you need to, get approved. If that's the case, they should probably giving you a loan denial letter that you can, give to your agent to give to the seller so you can get your earnest money back. Because in most cases, you can get your earnest money back if you do not qualify for financing. There should be some kind of finance contingency. Unless you're really close to closing, sometimes that finance contingency will expire, but you should be really close to that finance contingency. Now, what else did I want to say? Also, what they're also doing is, so if you're close to closing, you're already under contract, and this changes. Some lenders are allowing, if you've already locked your loan, you're close to closing, they're not going to change up the terms on you. But if you're just pre-qualified, then the terms might change. Some lenders are stopping the process through closing, even if you've already locked your rate. So I've had another realtor for my broker that said 3 days prior to closing, then the lender said that they were not going to fund the loan. And I think his buyer had a 630 credit score. So it is happening. It's varying by lender as to if they're letting the ones that have already locked their rates go through to closing, or if they're pulling back and saying, no, you cannot close. So be in contact with your lender, be in contact with your real estate agent, so you know, number one, can my earnest money be saved? Number two, can I just get out of it? What are my terms? That sort of thing. But if interest rates on average are in the threes and they're offering you something much higher, you need to think about that before you close that loan. That's what I want to talk about with FHA. FHA, USDA are pretty much in that same ballpark. Termination. So people are terminating their loans primarily because they've lost their jobs or they've been severely cut back. Another thing that lenders are doing, they are calling the employer. They always verify employment, verify that you work there, but now they're calling like 3 days, the same day of closing, to make sure you still work there, your hours haven't been cut, those kind of things. Now they're doing that. Sometimes they really didn't do that all the time. Once they verified it once, that was it. Now they're calling like the day before closing to verify that you're still employed at that employer and that your hours have not been cut. Because some people have just been furloughed. So if they've been furloughed, maybe they're still working there, but now they're making less. So they're calling the day of. If they feel like your employment has changed significantly, they may deny your loan. Loan forbearance. So one of the things that came out in the stimulus, two things. One was they're holding off on evictions, and then loan forbearance. So if you already have a mortgage, you have the option to put your loan on forbearance. Now, let's talk about the loan forbearance if you already have a mortgage. What they're doing is, in most cases, you can put your mortgage on forbearance, but so say you do it for 3 months. It's not like they're going to add those 3 months to the end of the loan. They're going to make you, in most cases, read your loan documents to see what they're offering you. But in a lot of cases, they're making you pay that amount in bulk, like all at once. So say you don't pay for 3 months and your mortgage was $1,500. So at the end of the 3 months, you're going to owe that month's mortgage payment plus the $4,500 that you owed from before. So they're not allowing you to pay it over time. They are making you pay it all at once. So loan forbearance is not a good deal unless you absolutely need it, because what's going to happen in 4 months? Are you going to have that lump sum available to pay them back? So just make sure you're doing that. Same thing with your landlords or your rental companies. Talk to them now and say, okay, if I do put my rent on forbearance, if I don't pay my rent for this month, what happens? How do I pay you back? And get it in writing. They are not supposed to be reporting you. They're supposed to report you current. So if you forbearance or on the forbearance for rental. So if you stop paying your rent for a month or so and you have that approval and you're not going to get evicted, they're not supposed to report you to the credit bureaus. So your credit should not be affected. You need to make sure and get that in writing from them as well, though. But part of the stimulus says that you cannot report it to the credit bureaus. But again, I would say just since everything is so new, get everything in writing. And that's all. I'm going to talk about FHA, terminations, loan forbearance. And that's really it. Just verify everything. One of the reasons, and I talked about savings, and I'm going to talk more about it. I just wanted to get this information out for anybody that might be in the loan process right now. You need to have an emergency fund. Some funds, cash save. If you truly do not need the stimulus checks that are coming out to pay your bills, then go ahead and put that money aside so you can have a cash cushion in the future, because you never know what's going to happen as the months progress. So save that money. Do not spend that money. The reason why my family has 6 months or more of savings for an emergency fund is because prior to now, like, we made that our goal probably 2 or 3 years ago to make sure we had that savings. When my family would ask, well, we're going to Disney World this year, you want to take the kids? We said no. We were very specific about wanting to reach the goal to have that money, that security. We didn't know about coronavirus or anything like that happening, but you never know what's going to happen in your life individually. This just happens to be happening to all of us at one time. But, you know, people have crisis in their own lives, in their own families a lot, where somebody might get laid off, something may happen. We all need an emergency fund. So again, if you do not need the money that they're giving us in the stimulus, please just save it. Save as much money, save as much of it as you can, and use only for necessities that you need. So this is my update for today. Thank you for watching. Just make sure I will be posting more videos. If you have any questions about FHA loans right now, any questions about terminating your or getting out of your contract, if you are in a contract right now, then please let me know. For the most part, if you lose your job, then you will be protected as long as you're in the time limits of your contract to get your earnest money back. And use your forbearance, but use it wisely. You do not want to be stuck where you're just kind of delaying the inevitable. If you can pay, go ahead and pay. But if you cannot, you want to make sure that you're making some arrangements, because if they tell you that they want all the money as a lump sum, that's going to be a problem. So prepare for that. Thank you so much for watching. Again, if you have any questions, please put them in the comments. I try to answer all of them. Thank you so much for watching. Please like and subscribe to my channel for new videos every week. Thank you.